Hello and welcome to another edition of Ask Envision, where we are always tackling the tough questions in equipment finance and lease. Hello and welcome to another edition of Ask Envision. And on today's episode, being that we are so close to the end of 2016, we thought it was very appropriate that we talk about Section 179 and what it means to your business. So enjoy this short video, and of course, if you have questions, we look forward to hearing from you. Thank you.
Most people think the IRS Section 179 deduction is some mysterious or complicated tax code. It really isn't, as you'll see. Essentially, Section 179 allows businesses to deduct the full purchase price of qualifying equipment or vehicles during the tax year. That means that if you buy a piece of qualifying equipment, by the end of the year you can deduct the full purchase price up to a taxable loss from your gross income. This is a huge incentive to encourage business owners to buy equipment and invest in themselves. Millions of small businesses are taking action and reaping the benefits of these deductions. So how does it work? Without the 179 deduction, when your business buys certain equipment or vehicles, it typically gets to write them off a little at a time through depreciation. As an example, if your company spends $75,000, let's say on a truck, it gets to write off $15,000 a year for 5 years. Now, while it's true that this is better than no write-off at all, most business owners would really prefer to write off the entire purchase price in the year they buy it, potentially reducing their tax liability. In fact, if a business could write off the entire amount, they might add more equipment instead of waiting over the next few years. That's the whole purpose behind Section 179, to motivate the economy, to keep your business moving in the right direction, and to stay competitive. Now, in 2016, the entire cost can be written off on your tax return, up to $500,000. This is a big increase from other years. So who can qualify for Section 179? Any businesses that purchase, finance, and/or lease less than $2 million in new or used business equipment during tax year 2016 should qualify. The equipment and/or vehicles must be used for business purposes more than 50% of the time to qualify. Now, of course, make sure you consult your tax professional to help you. Don't let this opportunity pass you by. Remember, for this deduction, the vehicles must be purchased or leased and placed into service by the end of this year.